Hi guys, well, a couple of days. It seems we've gone from this all of a sudden to this. People seeing a bit of green in the market and thinking, oh, I'm going to rush back. Just because the market's green doesn't mean we have to go chucking cash at it. We had some good earnings as expected by the FAANG stocks, and that would have lifted the tech sector, but as we saw as well, after hours it gave back some of those gains. Now the question is, how good were those earnings, and is it worth picking them up? And we look at that today, and if we get a chance we'll have a look at Workhorse as well. However, we take it one by one. My favourite of the lot, Facebook. Why, earnings of 271 against the 191 forecast. Revenue 21.47 billion against 19.8 billion. Daily active users up by 1.82 billion versus 1.79 billion. Monthly active users 2.74 billion versus 2.7 billion. Average revenue per user is $7.89 versus $7.32. Now, they had high expectations for Facebook and they blew them out of the water. Now, the thing is, Facebook went up and came back down. So, it's because of what's going on in the market, it hasn't really gained. You had an after hours gain and that was it. So Facebook, I think when you look at its PE and its growth potential, I think is the best out of the bunch. Now we're looking at Google. Now, they had some of the best earnings and they have some great growth. They are the second best for me because their PE is the second best. Their growth is one of the best. The thing is, even if they get split up, the likes of, same with Facebook, if Facebook gets split up, Instagram, all their parts, they still be as valuable. It's a separate entity. If anything, they may become more valuable because they can charge more. Things like WhatsApp that they're not charging for, these little things they're not charging for, they will find a reason to charge for them. But Alphabet have earnings per share of $16.40 versus $11.29, revenue of $46.17 billion versus $42.9 billion. Almost didn't say the point billion. It's getting weird when you're not doing that because it's so good. Google Cloud 3.44 billion versus 3.32 billion. YouTube ads 5.04 billion versus 4.39 billion. Traffic acquisition costs 8.17 billion versus 7.66 billion, which has obviously gone up, but you expect that. Now, they have a massive amount of cash on hand now. And this has gone up, but I expected that because it's been trading sideways for months. This has been one of the underperforming FAANG stocks. I say underperforming, it's gone up 50% since March, but when you consider how much the others have gone up, you know, this just hasn't gone up as much. And I think what other people and other YouTubers are not speaking about, one thing they're not speaking about is something I announced back in June. If you go into the court records, you'll see Google took Uber to court and won over Uber stealing the source code of their autonomous driving system, and Uber had to give them millions of shares. So now Uber are merely working on autonomous driving for Google. All that information and all that, they need autonomous driving, Uber, to be able to survive. But if they crack it, Google's going to be the beneficiary, because they will get a huge slice of that pie without putting any money in. Now, we go to... Guys, welcome to the Savvy Money Show with me, your host Sean. If you want to help support the channel, don't forget to smash that lovely like button, and don't forget to hit the bell notification if you want to be reminded of when a video gets uploaded. And why not smash the sexy subscribe button? A lot sexier than me, just ask the wife. And because I upload multiple times a day. And while you're at it, why not comment in the comment box down below? I'm also putting a load of free links in the description box. Why not check them out? And if you're looking for a free trading platform on which to trade your stocks and shares, why not check out Free Trade Trading with 212 and Stake? You get a free share worth up to £200 or dollars for signing up and depositing a small amount. So amazing Amazon. I got slammed for selling my shares at 34.40 just after I tore it apart and said I reckon it will hit 4,000 a share by the end of the year, and I said it will hit 4,700 next year, 4,750 next year after these earnings. I don't think there'll be a stock split. If there was, it would have gone to 5,000. Now, firstly, it isn't the market for it. Secondly, they're not the type of company to follow suit. If they were going to do it, they would have done it by now. I'll give you the pluses and the minuses. Now, for a company of this size to post a 37% revenue growth is just out of this world. They're the third because they would normally be first because of the revenue growth for a company this size, but because of the PE, because of the price, because of the value, and because of their expectations next time. And there's so many things. Remember, they've already been fined for failure of COVID. Remember last time earnings round, they said don't expect profit because we're putting money into protecting our workers for COVID. And then they had millions of workers get infected with COVID and some die, and they got fined over it. Now that happens again, they won't get this little fine that they got last time. They will get a massive fine. And it will really, there will be a lot more restrictions, and it will be seen as them not caring about their workers. Now, their earnings was 12.37 versus 7.41. I thought 7.41 was a joke. Now, I thought $9, $10, 12 at 37, that's amazing. The 96 billion versus 92.7 billion. Nah, it's amazing. The thing is with Amazon is, because the guy in charge, he could either spend money or save money. He can do what he wants. Now, whenever he goes and spends money, people see that as there's a reason behind that, and 95% of the time there is. But 5% of the time, he's just tinkering around. It's like, oh well, this looks interesting. And it's a case of, if it takes off, it takes off. If it doesn't, it doesn't. You know, and I'll write it off in tax. Well, what little tax they do pay. But the thing is, their expectations next year are a lot higher. I think they will beat them, but of course there's a chance that they won't, because they're so high. It's going to be touch and go. If they don't, could go down. I think you've got to wait for it to dip. I've said all along, since it's got 34.40, you've got to wait for it to dip below 3,000 to pick up. Of course, if you don't have an entry point, then it's up to you if you want to. And there's a great earnings. They're expected to grow massively. So that would be your decision. Now, we have Apple. Earnings per share, 73 cents versus 70 cents. The revenue, 64.7 billion versus 63.7 billion. And that's up 1% year over year. I'll get back to the iPhone in a minute because it's important. Services revenue, 14.55 billion versus 14.08 billion. Up 16.3% year over year. Other products, 7.88 billion versus 7.4 billion. Up 21% year over year. Mac revenue, 9 billion versus 7.93 billion. iPad revenue, 6.8 billion versus 6.12 billion. Up 46%. Gross margin, 38.2% versus 38.1% estimated. They have just beaten. And you know what makes people worried about this? That they have only just beaten. They are thinking, people have gone out and bought the Macs, the iPads, they're using more services because of the Rona. They bought them now, they're not going to buy them again. We've got the service revenue may continue, but once the Rona's over, that will go down. So the revenue will go down. And they've got the iPhone revenue to 26.44 billion versus 27.93 billion, down 20.7% year over year. 40% of the revenues from iPhone. Now, there's another thing, but they don't seem to realise iPhone 12 has come out and they've got a good price point, and this is coming from someone who's an Android. My family's all iPhone, but I'm an Android person. I find it too closed off a network for me. Now, the thing about the iPhone is you won't get any revenue coming in until the next quarter. And I think you have to realise a lot of people have stopped buying phones until the 5G phone comes out. So that will go up. Macs and iPads, yes, that will slow down. However, you also have to realise some people are waiting for a Black Friday, Cyber Monday event to buy, so you'll get some then as well. I think if it hits $100 a share, between $100 and $105, if you're not in it, that's a good entry point. If you're already in it, anything under $100 a share is when to get in. And I'm sorry we didn't get time to talk about Workhorse, but I will do another video about it and upload it as soon as possible. But I want to get this earnings one out as soon as I could. Anyway, don't forget to like and comment in the box below, and I'll see you in the next video.